Welcome, Auvorians, to the Getting Started Late Midweek Software Strategy Session. I am Steve Vetterol. Welcome. Hope everybody's getting pumped. 2 weeks is going to be a massive release. So I wanted to go through the disclosure as always. So if I could do, please, from somebody in the chat window, do know the Q&A window is open as well. Can you see my screen? Risk disclosure. And can you hear me okay? Now we've had some issues with the Zoomage, so wanted to make sure that everybody can hear me and see my screen. All right, looks like we're off to the races. Trading in the foreign exchange market carries high risk and may not be suitable for all investors trading on margin. And utilizing leverage can carry even higher levels of risk that can lead to complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, levels of experience, and risk tolerance. Most importantly, whether or not you can afford to lose the money. So I always suggest going demo first. And now with all our really cool and very flexible subscription models that will be released, you guys will be able to do that intra-week. So let's shift over to Forex Calendar. I am not trading this week. I posted that on the Telegram channel. If you do not subscribe to the Telegram channel, I highly suggest that you do. We have a lot of volatile factors that continue to play out. I know that the great thing about a lot of the software is it's pulled a lot of accounts up into some pretty great profitability I've seen, but we don't want to make the mistake of sort of letting the profits wither away in any crazy volatility. So as hopefully you can see the Forex Factory screen, we got a week that is fairly fraught with risk. So albeit really nothing has been said to disrupt currency markets. Our current president, Donald Trump, he is out of the hospital. The markets have rallied on that. I think that has brought a little bit of ease to it, albeit really hasn't done anything to the dollar. What you guys are seeing a daily chart of, each of these candles represents 1 day. So we've had a big move, obviously, early in the summer. And we really based out around what 92 is just absolutely looking to be a major support point at this stage or juncture. Had a big rally, broke out of the upper area. Now we're back down inside of a fairly tight range. I would expect this to continue to range out. It could be stuck in this range until November 3rd. In the elections, possibly further, possibly even into the end of the year, depending on what kind of elections we have. If it's stable, if it's a normal process, or if it just turns into hanging chads and the bananasness that took place in Florida many, many years ago. So here's the dollar. Don't really have much more to say about that. Let's take a look at the pound. GBP USD, again, bounced off the daily chart here, the 200 MA, which is the green line. We're back up now with resistance in an area we broke through of almost the 1.30076 area, right in this area here. Don't really have much to say about that as well. So let's move on to the Euro USD. Doji candle, albeit the day is not over, have essentially back up inside the range as the dollar reverse course down, thus sending all currencies, for the most part, in the majors category up. I focus mostly on these. One thing I did want to mention in the calendar, where is it? So we have really had, I thought, was more craziness was going to come out of this. Usually there's Q&As associated with this, but no release that I hadn't really seen on just really not that crazy. So when we had a big rally yesterday, the markets, just as far as equities here, somewhat holding firm here, bounced off a very important support point. A lot of people ask questions. I got a couple last week of, hey, how do you know where to draw the lines? Well, I mean, you can kind of see where the support and resistance points are. You're just essentially looking to touch the most lines of inflection, if you will, um, in terms of just big areas. But what another reason I draw these lines is I actually overlay the volume on the left-hand side of the chart, which I primarily do in equities and futures land. It's a little more murky trying to overlay volume in forex land because it's just not accurate. So it's accurate on the other types of exchanges, and that's sort of my biggest bitch always about forex. Is I wish the accuracy of the volume was really, it was there, essentially with the 14 large banks that trade, if we could just actually get like a real volume calculation, I could put it on the left hand side of the chart and it would aggregate the volume, and it would sort of look like you see down here, but it would be on the left side of the chart. It's what's called volume and time based profiling. So it's another very important component of trading other types of markets that I wish we could utilize from the manual trading perspective or analysis for forex. I think at some point that'll come to fruition, and that'll allow us to view what's called order flow, which at its most micro level is the execution of orders in mass, being able to aggregate where all those executions take place. It's where I'm mostly known for on the other side of the biz in the futures land because of my work in auction market theory, AMT. All right, so now that I bored you guys to death with all that, let's take a look at the euro, the USD JPY. Again, really not a lot going on here. None of the craziness that we saw back in the spring, right? And I think the good thing about this is that currency markets are somewhat leveling out as certain countries are emerging from pandemic and draconian shutdown modes. Albeit I find it really interesting how well Switzerland has done. I think at some point they're going to become a model for how this is all working. Maybe we should start trading more CHF, right? So here's the Euro JPY. Again, broke out from this particular level right here, cup with handle pattern, went into a tight range, broke below that point. That's why you see this long candle. This was a big old stop run as we broke down below this level. We leveled off, which arguably is another support level down here. Now we're coming back up against, as you can see, we had some resistance on this rip back up into this area. If we get back in above this level, I'm less likely on bursting through resistance levels going up or on the way down. I'm less likely to take trades against that trend. So if I'm someone that's taking clicks every day from Alexander, which is great stuff recently, software's done really well. I just am not as interested in fighting the freight train. So those are the sort of outside of the most important things you can do. The problem with that type of recommendation is that everybody takes that in different context, right? So there's a lot of ambiguity surrounding statements like that. That's why I don't make them that much because, I mean, heck, I've even screwed some of these trades up, right? And throughout this whole process, the last 5 months, while I've been captaining the strategy helm, if you will, of our ship, which is about to get much larger and have a heck of a lot more cargo on it, it's going to be imperative that everybody pay attention to these calls. I mean, some of these weekly calls, I'm going to get them dead wrong, right? Maybe we should have been trading. Some of these calls, hopefully in the last couple of months, I've gotten pretty right. So in these weeks that I've just stayed out of it, it's been, in many cases, just absolute melees, and the funny thing is, maybe it's just stupid luck on my part, towards the beginning of the summer in June when things were really bananas, I actually accidentally had the trading systems, which was Einstein at the time. I had it off. It's just my own dumb luck. During a period of time, I had the system off because I was still getting used to how to operate those expert advisors in the MT4 platform. So even Stevie does dumb moves. All right, so let's go through. Actually, let's take a look. Looks like some of the questions I'm getting. Yeah, let's look at that again. I have no problem actually showing that. Do note, guys, by the way, and let's see if I can find this. Maybe this will help everybody. And I've got to believe your team should have already addressed this, but this is more of a compliance thing I'm going to show you guys. And here it is. If you guys want me to post this, I can. You guys should see my Telegram channel here, or all the channels I belong to, which is a bananas amount of channels. This is our new disclaimer. So if you guys want me to post this in the chat room, I will. This really should be used on any my FX book. Now, obviously, this is a disclaimer, maybe that's more in tune to USA. I'm still going to post it in the chat window here. So make sure you guys put this. Actually, I'll post that first. So there's it's a podcast I'm actually going to be on tomorrow on YouTube. That's the live link right there. Let's see if we can highlight the dog. See if this works. No? Yeah, how about that? I'm not thinking that this is going to be like real. Maybe I'll just post it on my channel. How about that? In any case, I'm sure you guys use that. This is actually a really good disclaimer. So I'll pull that over here. All right, as I get off track, let's go and answer that question. All right, so this is the developer Desan's long-term variable account. Okay. This was updated as of September 28th. Do note this account has a couple of open trades on that were taken quite a while ago. The profit here is about $20. You can add that to the. But essentially, the account was started with $1,000 in deposits, and you can see since 23rd, coming up on a year at this point, a couple of weeks, which is kind of interesting. Let's be right around our launch. So this is a year of running this. It's essentially the variable turned $1,000 into 12 grand. Here's another account where it's $500. Show this one to you guys. Not as long of a track record. This is Ryan Doctor's account. This thing has done better recently because it has slightly different parameters on it. But you guys can see this thing's just killing it. So some months are fantastic, some months less of a return. As the account grows, the interesting thing about Desan's account, the developer, even though the account grew exponentially, it never changed the lot size. It's still 0.01, you guys. So if you notice with the performance we've seen this year, notice how it's smaller in relation to last year. See the difference? It's because we didn't change the trade size, right? So certainly, arguably, the trade size should be increased to probably a 0.02 lot size, just because of the account size, right? You could keep it at 0.01. Hell, you could probably go to 0.03 with this account, right? Or 4. It's just a bit much, in my opinion. But the cool thing is they just wanted to let it run and just, essentially little pop shots along the way, a couple of big runs because the thing caught some huge trades during the sell-off in the markets and so forth, and all that. But, the key thing is variables clobbered it. And it's done well enough that, there's a whole Auvoria Prime subscriber and corporation base that is going to be using this software in addition to Alexander Einstein, Stratamus, Neo, the Legend, as well as Gearbox. So these are all the ones that are coming out. I know there's a whole bunch of calls scheduled for the next 2 weeks. I know this is probably less of a strategy call I'm having and more of a, hey, what's going on with the software call, but so be it. Some of this stuff needs to be addressed along with those disclaimers. I think it's important. Keep everything legit. What else do I want to say about this? 0.01. Yeah, here's the currencies. So you can see just 3 pairs running. Note no Euro JPY, but if you switch over to Hassan's account, the currencies he's trading, um, he's got USJPY, but he's brought in, let me see, double check. Yeah, he's brought in the Aussie, as you can see, Aussie USD right here. And I mean, not as many trades as GBP USD has put up. Okay, it's put up almost twice the trades. But interestingly enough, most of the profits actually come from Euro USD. See that? Pretty decent advantage. So don't ask me any questions about what currencies I'm going to run. I know that the system's being optimized for the currencies that are best to run, so it's sort of going to choose for you. Should you allow to have that setting on? I think we will have that choice. I'm not 100%. I don't quote me on that. I could be wrong on that. But ideal in a perfect world, the software also chooses the best pairs to run for you. Now, keep in mind this from a risk standpoint, this doesn't necessarily mean you could just, turn this on in your system and just let it go. I still think you're going to need to pay attention to it from a risk management standpoint. Even the top hedge funds, like a Renaissance Capital that are just absolutely printing money, they still have absolute teams of superstars and Johnny Neutrons watching damn near every trade that gets executed, or I should say an overview of all the trades that get executed in a particular fund account. So I would challenge you guys to be the same in terms of having an institutional mindset. Even though software may be running for you, you want to keep an eye on it. Keep an eye on what's going on with the calendar, right? Could be weeks that are fraught with risk, stuff that I will get right, stuff that I will get wrong. Hopefully that answers your question. All right, so it looks like 3 high-impact news events on the Euro this week from Lagarde speaking have since turned into medium-impact events. Is this common, and what causes it to go from high-impact to medium impact? That's actually a pretty good question. So I don't... Huh. Huh. That is a great question. I don't know the answer to that, Damien. Why did these impacts, I would say that just off of a... So more than likely what this is this is just the dog and pony show. So I would say that more than likely Forex Factory had this mislabeled. That would be my best educated guess on why it moved to essentially an orange event. For those that don't understand, these colors are important. Red, obviously, impact is high. Want to pay attention to that stuff much more so in many cases than any other color on here, right? But the next color down in the list, as you can see by the expected impacts, gray, not much, yellow, not much, certainly a little more impact orange. That's the first time I've actually ever seen that change. Means they probably screwed it up. All right. Good question, Damien. You get the question award for the summer. Variable. Asif, if I'm pronouncing her name right. Take a quick look, my man. May 18th to now. Are we clear? See that? Always pay attention to the duration, right? Not the longest period of time, right? And a lot of these, Neo is going to be the piece of software that we have the longest track record on. Thing's been pulling out damn near 10% a month for almost 4 years, if I'm not mistaken, from what I recall in our board presentations from the developers. But this one has a year track record on it from the actual developer's account directly itself. But yes, that is the return. This thing's collaborative. All right. Now, okay, more questions here. Let's switch over. So here is the question you asked me about the Aussie US dollar. So that's the win rates. The interesting thing about variables, these win rates aren't in like the 80s or the 70s. And you got win rates with this software, high 50s, low 60s, depending on what it's running on. Really good stuff. I mean, it just goes to show you don't need a win rate in the 70s or 80s to make money. You just need to win a little bit more than you lose, right? And take little pop shots. And the great thing about this is we were to really dissect essentially in this account the approximate 3,000 trades that snapped off over the last year. What we would see is the things taking little pop shots, boom, every week, 2-3%, consistently pulling off 10, 15 a month. Arguably, and this is a strong arguably, I personally would have at least increased the lot size on this account to 0.02. Okay. Because you can see how the account's big and it's popping little shots off and it's not getting much of a return, right? Now, nobody should be in any mode to complain about this. But it just goes to show if you're happy with very low risk, which is where this particular mode is here, just based on account size. So if somebody came to me and said, hey, Steve, I want to just be ultra conservative, the most conservative with the 10 grand live that I go on in this account, then do what this account's doing, 0.01 per 10K. Can't get much more conservative than that, okay, as far as trade lot size. All right. Let me check one thing here. Getting pinged and dinged left or over. All right, here. Aussie dollar. All right. As if you're a funny dude, man. I like these jokes. Do you take market seasonals into account for overall possible trend bias during certain months? Now, if your question of like that was about gold or, red winter wheat or something like pork bellies or orange juice futures, I mean, I can have a discussion and go on and on about all that stuff. I don't want to bore you guys with that, but a great way to go in and why did I lose the icon? What happened to it? Oh, here it is. Let's go to finviz.com, you guys. Just click on the futures. You can see the entire dashboard of what's going on. Then click on do it for a daily with CDs, and then just click on charts. What it'll do is it'll put a daily chart against everything out here. And you can begin to see how some of the seasonality changes take place, whether it's in metals, right? Cattle, obviously, cattle, hogs. I mean, there's seasonality to that. There's seasonality to a lot of stuff. I don't know, honestly, if you really can put a finger on honest seasonality surrounding currencies. I think that they trade mostly just based on macro events that lift themselves in any given day, and most of that's just due to, GDP of a country and or the amount of debt they have. Obviously, the dollar's weakened because the U.S. has brought on a number of stimulus packages and added a lot of debt. Arguably, the dollar probably should be lower. That's what my call is for the longer term, thus lifting all the other currencies. But, it's always the lesser of two evils right now in terms of currency land. But this is a good way to go in and not only catch what's going on in currencies and compare different stuff. I look at this stuff a lot, and a lot of it has to do with just understanding correlations, just from the very big picture. You don't really have to dive into it. And you could just look at stuff like, here's what's going on between all the fixed incomes of the U.S., right? 30-year 10, 5-2. And what do the correlations look like? Obviously, the prices of these things have all dropped a bunch, right? That has a lot to do, obviously, with debt levels and, just moving into and out of equities. So goes. A lot of this doesn't necessarily have anything to do with Forex, but I'm going to try and continue to teach you guys to have an overall macro view of what's going on globally in all asset classes. It will really help understand, not only how your equity portfolios or 401ks or whatever your retirement plan's called, is doing, but how to allocate it, how to understand how those things, especially the dollar, affect all currencies globally. But I love this comparison. This is one of the only websites out there I found that actually shows it in this particular form. So I can see that, hey, but the 10 years really dropped. What's that done to, the dollar? How's the dollar been correlated between the 10-year? This is a big deal as far as mortgage rates in this country, right? Mostly based on the 10-year. So the ping pong in between these two and how that affects the euro. Or, what I like to call pin action off of these two, right, can spill over into a lot of other currencies, especially with the consistent weakness we've seen in the US dollar, has led to, moving up as it's moved down in the big two. But we really haven't seen any kind of perfect inverse correlation that we've seen with the big two right here. Maybe a little lesser degree JPY, but we haven't seen that types of correlation in the other majors. Canadian dollar hasn't really been a perfect inverse correlation to the US. See that? So the problem is, I can educate you guys on the big picture. And I'll actually be talking a lot about this tomorrow. For the question I just got, I'm going to be on Casey's podcast. If you guys don't know who Casey Stubbs is, he's sort of like the Joe Rogan of podcasts in the Forex and futures and market space. He's actually a really good guy, Army vet. He's got 9 kids. So, he's actually a really good guy. So I'm looking forward to the chat tomorrow morning, and we'll stream it live on this channel. If you guys haven't gone and subscribed to him, I would. He's a really good guy. We'll stream this live, and then he's going to edit it, and they'll put it in his podcast list. I'll be talking about all kinds of stuff, but I definitely will be talking about Auvoria tomorrow, guys, as well. And yes, for the questions I still am getting on variable, those percentages are verified, gentlemen. The one question says, would it have traded the crash down to make the 200%? Yes, that is correct. That was variable. Let me delete some of these questions here. What you're seeing here, I don't know if you guys can see this, but the question was asked, is this demo or live? This one's demo. It's been running for a long time. Results aren't going to be any different than running live, in my opinion. Although the jury, I guess, is still out on that as far as doing a deep dive discussion. Any other questions on anything? Otherwise, Federal's going to drop the mic. Questions on anything? Question is, what software is running on FX Trader 2? It's called Variable. It's one of our new releases that's coming out. Cross your fingers. In 2 weeks. I assume the developers of each software will share the recommended settings just like you've recommended settings. Okay, so give you guys a little sneak peeker here. I think I can show this. Don't hate me if I can. So variable setup. We have the setup videos almost finished on that. Yes, Dasan, who is the developer, he's showing that it's doing a pretty deep dive. So, Sif, you probably should, since you've got lots of great questions. If I'm pronouncing your name wrong, I apologize. But you seem really pumped, dude. Go out and tell 10 people, man. You get all your software and multiple subscriptions for free. I've got a guy on my team. He's going to be bringing in 100 people. Killer numbers. So, Orion's demo account settings on Variable will be available. So I leave that up to compliance. I can show this. I think I've posted this on my channel, if I'm not mistaken, right? Let's go take a look. The channel's a Trade Tracker with Steve Vetterl on Telegram. If you guys aren't subscribed, I would highly suggest. I think I've posted it. I probably should post all the disclaimer stuff too. So if I haven't posted it, let me find out if I can first. That's really the key. The interesting thing about this is I actually did a pretty deep dive on this. And with our new CFTC, which just stands for the Commodity Futures Trading Commission. Them along with the FTC, these are both, I mean, the Federal Trade Commission is a government agency. The CFTC sort of quasi, kind of like a FINRA, right? Whereas an SEC.gov is a government agency. All these guys have some form of regulation, either over advisors or markets or what have you. I guess we're going to be retaining the services of a CFTC, which we already have because we're switching over to a new attorney. And I've asked direct questions about showing my FX books. And the big complaint among the FTC and the vast majority of all of their sort of cease and desist and shutdown and huge findings and rulings and all these crackdowns have all come from organizations that don't play in the Forex space. Some are futures, a lot of them are equities coaches, like the Online Trading Academy guys at Irvine are. They got busted big time because of false performance. Whereas with this, okay, this is the key. We've actually shown this to our attorneys and like, no, that's fine. As long as you have the disclaimer, which is a fairly lengthy paragraph now, you can show these results because they're verified. It's a complete third party FX book, has nothing to do with MetaTrader. They are an autonomous organization. And that brings some validity to what we're showing. Finishes your guys' questions. Yes, that is true. Everybody will be developing and or you're welcome. I smoke large Cuban cigars. If you're interested in sending me a box, you are welcome. All right, so let me find out about that. Yeah, so go spread the word, guys. Make sure you use your all your stuff, and we'll take it from there. All right, I got to take off, guys. I got a bunch of client stuff to do and get ready for me podcast tomorrow. I have to put on my face tomorrow morning, going on the camera live. Put the fat guy in the camera. So, wish me luck. I will see you guys on Saturday for the weekend forecast. Hopefully we have less volatile times in front of us. And if you got any questions, as always, you guys can send me an email, svettorel, VETTOREL, at AuvoriaPrime.com. I highly suggest everybody set up a MyFX book account. Once you get the software installed and it's up and running on demo or live, please set a MyFX book. This will do you tremendous amounts of good in understanding how to analyze. Even if it's very on the surface stuff, you're really only going to care about things like drawdown, right? Which has been virtually nil over the last year with the software, a couple of times where it's taken cracks. And by the way, guys, just so you understand the power here, or even to a lesser degree, there's been less drawdown in Ryan's account. You can see the drawdown here, but the worst was 11.4. I mean, this is institutional type numbers. So, I mean, you could be sitting in front of the University of Texas, as little Algo Steve trying to get a piece of University of Texas's endowment money, right? And all the guys on staff, they won't even let you in the door if this drawdown number is anywhere around 17, 20%. You won't even see them. Okay, so just always be thinking like institutional, and I'll wish you guys a happy week. Make the trades be with you.